Over the past 10 trading days, I've been able to pull $45,000 worth of profit out of my 5 funded Top Step accounts. To do this, I use just one very simple trading strategy, and I'm going to show you guys exactly what that is in this video. But before we get into that, if you could subscribe and leave a like on the video, that would be greatly appreciated. So I'm going to show you guys exactly what I do every single day, what I look for, why I enter, and why I exit in every single trade that I do. And in using my strategy every day, I was able to get all 5 of my Top Step accounts up $16,000 in just 5 trading days. All right, and with that being said, let's get into the actual strategy here. These are all going to be trades that I took in the past week, and I'm just going to go through my thought process and what I'm looking for through each of these trades. So the first thing that I do every morning is try to get a general feel of the market, where it's trending right now, and where it possibly could be heading in the future. So in this example here, you can see at 9 a.m. before market open, there's a little bit of an uptrend continuation from a much larger uptrend in the past. But you can see it is starting to sell off pretty hard. So all things taken into consideration, there's a larger overall uptrend, but we are starting a pretty significant downtrend right around 9 a.m. So what this is telling me is that at the current state of the market right now, I'm not looking to take a trade in either direction until we start to figure out where the trend is actually going to be once the volatility from the 9:30 a.m. open actually happens. And basically what I'm looking for pre-market is areas of liquidity or areas of possible contention that the market is going to take out in whatever move it makes, whether that is up or down. So what I'm going to do now is mark out these areas of liquidity and these areas of unfilled orders, which all those are previous highs and lows that have not yet been taken out. So in this instance, that would be right here, and right here for the high. So either way, whichever way the market decides to go, these are going to be my daily goals. If I start to see a continuation of this uptrend, my goal will be here. If I start to see a turn into a downtrend, my new goal will be these 2 areas of liquidity down here. So now what I'm going to do at this point is let the market play out a little bit more and see which direction it is trending towards as we get closer to market open. Okay, so as you see here, just 5 minutes later, we start to take out some lower liquidity right here, and the trend is definitely starting to reverse into a downtrend as all the lows are being broken and a new low is being created. So now at this point, seeing how hard everything is selling off, I'm definitely going to be looking for shorts and looking to take out this lower liquidity down here as the next target goal. So in terms of entries, I'm not big on having specific entry criteria. I am just a big believer in whichever way you think the market is going to go, you buy in that direction and just let it play out. I'll set my stop loss at a prior high, such as here. I'll set my take profit at the lower liquidity that I plan to take out by the end of this move, and then I will just let the trade run. So for this example, let's frame the trade exactly how I set it up before. We're going to move our stop loss up to this prior high and move our take profit down here. And as you can see, our risk to reward ratio is at 2.4, meaning whatever you want to risk, if it hits full profit, you're going to get 2.4 times that amount. So with whatever amount of contracts you're going to be trading, that is going to change the actual dollar amounts. But what's important to know is that our reward is going to be a little bit more than double our risk. So let's go ahead and enter in this trade and see how it plays out. So it's instantly off to a very good start. At this point, once it gets above $1,000 and starts continuing another trend downward, I'm going to move to break even and then let it run. And I'm not going to do anything else. I don't micromanage. I just let the play run out. And you can see once market opened, we started getting some huge volatility. We almost hit our take profit. It pulled back pretty significantly, and then it did finally end up taking out this prior low and the low below it as well, just 15 minutes after open. And it really is that easy. It's as simple as just finding the liquidity, the areas of liquidity and unfilled orders, mapping them out, finding the trend and actually being able to track the trend and where you think the market is planning to go in the future, entering in your trade, moving to break even once you get significant profit, and then letting it ride. So now that we knocked out these 2 areas of liquidity right here, we're going to get these off of the map and try and figure out what to do next. So that is a very good question. What next after we took out our liquidity goal for the day? Well, for one, you can stop trading right there, take your profit, and then move on to the next day. Or if you have a bigger profit goal in mind and you want to keep trading for the day, or maybe you missed out on this initial trade and want to get into one after you feel like you potentially missed out on the big move of the day. Well, from here, there's a couple different things that can happen. And the first one being a trend reversal. Once the liquidity is knocked out, there's no real reason for this to continue moving down, so it could go up to take out the new liquidity that has formed up here, or our original daily goal towards the upside. Or the other way that this could turn out is the trend could continue onto the areas of liquidity that are way below it, such as these ones here and here. So, what to do in this situation here? Well, what I would do is I would let this play out for a little bit longer, see if there is some possible reversal of the current trend, or see if it is going to just continue free falling. Patience plays a major role in the stock market, and entering in before or after it's a good time to do it will oftentimes just get you chopped up and in some bad trades that you're going to regret taking. So just like we did for the pre-market, I'm going to let this play out a little bit longer, see where the market wants to go, where it starts to form the new trend at, and then make an entry based off of that information. All right, so I'm just going to let this play out and see what kind of information we can gather. So immediately a strong pullback and potentially a reversal of the current trend from down to up. And then immediately after that, you see a very hard sell-off. So now at this point, I'm thinking that it is probably going to go to the next two areas of liquidity that we have previously marked out. So now I have the new trade framed up. And in this instance, the prior high is over 100 points difference between where the actual price is at right now. So having my stop loss at 100 points is not really something that I'm interested in. It just makes the risk to reward so extremely bad. It's only 1.5 risk to reward ratio for this. So what I did for this play was I moved my stop loss down to the top of this candle, which was still about 40 points difference from where the actual price was at, making this risk to reward much better as a 4.5 and still realistic, because having a stop loss of 100 points or 50 points, these are very, very high stop losses. But if you wanted to place it up here, this would make it a 2 risk to reward ratio, whatever you're comfortable with risking. But in this case, I was willing to take a pretty risky trade, so I did have my stop loss at the start of the candle right here. So let's get into this trade and see how this one played out. Okay, you can see instantly into the profit here, right around $1,500. At this point, I would move to break even. And you can see it is just free falling so heavily today. It gets near our take profit and then just rebounds a little bit and then just barely hits it right there. That's how insane these areas of liquidity are. They're such high areas of contention that literally the exact point that you put your stop loss or take profit at, it can hit that and then fully reverse from that point. So right there, our order just barely got filled, but it did get filled for a full profit of a 4.5 risk to reward ratio, which is another great trade. And then if we let this continue to play out, you'll see that even if the order didn't get filled right there, eventually it would have missed our break even and then came down, and it did end up fully crossing this area of liquidity that we had previously marked out. Okay, so those were two trades that went basically perfectly for me, but let's get into one that ended up going against me. So in this instance here, this is the very next day. This is the Friday of last week. I see that we have entered this huge downtrend here, and I'm looking to enter in a short at this point. So what I do is I zoom out to the 30 minutes and I look for potential areas of liquidity, such as right here and right here. So now that we've got that set up, I'm going to go back to the 1 minute time frame and I'm going to frame up this trade with this short calculator right here. I'm going to move my stop loss to right around $1,000 is where I had it. So not quite at this prior high, but there is a little bit of structure here in this candle that has a pretty significant wick, which to me signifies that it's ready to continue downward. So risking about $1,000, and all said and done, if this thing hits full profit, it'll be right around $6,000 of profit. So now that we have this trade framed up, let's go ahead and see how it played out. And as you can see, not only did it just barely stop me out, if my stop loss was placed properly, I would have never been stopped out of this trade. I would have gone hugely into the profit. And then at this point here, obviously I would have had a $6,000 gain across all 5 of my copy traded Top Step accounts. But instead, I was looking at negative $1,000 instead of a positive $6,000 on the day. This whole thing could have been avoided if I just would have stuck to my plan and not gotten greedy with my stop losses and my take profits. But obviously I'm not perfect and nobody's going to be perfect. So these are the things that we're just going to have to live and learn from. But this is my strategy. Very simple, can be used every single day. And there are constantly prior highs and prior lows that are being taken out, liquidity that's being hit, unfilled orders that are constantly being filled. So because of all these things, I strongly believe in my trading strategy. So try it out for yourself, back test it, and let me know what you guys think.